Hey traders, Raghee here, and in this recap video, we're going to talk about the 5-minute breach. Now, we've been talking quite a bit about day trading, and partly that's because of a lot of the choppy market trends we're seeing. It's partially the time of year. You know, we do have new highs, but on decelerating volume. So we know the participation from a volume standpoint is lower. And one of the things I like to do is to shorten my time frame and just not demand or expect longer term follow through from really any market. And then, you know, I think another thing that's great about intraday trading is for a lot of you, you've got day trading margin, and you've also got smaller stops, because typically the time frame that we're trading will be smaller as well. So let's go through the first of the 3 breaches that I look for every day. Now this will occur 35 past the hour. So I'm looking for this at approximately 9:35 a.m. Eastern. So I'll drop another vertical line. Now, it's really this simple. What do I need? I need consistent green grab candles. What else do I need? I'd like to see a cross. So here's the open. And then what I want to see is a cross of the 8-period exponential moving average higher through the 21. I want to see that kind of structure in the market. And the way that's represented on my chart is with these green, what we call propulsion dots. This is how we show the crossing of a short moving average through a long moving average. Now, you can customize the indicator to do whatever you'd like. It's a free indicator that we offer here at Simpler, and it's called Simpler Propulsion, and it's a key component of my TOPS indicator system, or approach, system approach, methodology, whatever you want to call it. So by the time I have 5, I'm really paying attention, 3 to 5, and it's got my attention. So if these dots are still visible while there's still green grab candles, what I'll look for is a breach through the high, which we got pretty quickly. And we didn't have a whole heck of a lot of time, but we got pretty quickly. And it was a 1707.20 level, 1707.20. So you'll see that right here. All right, and the market continued on. We also had a 15-minute breach, which is the same criteria. We want to see the dots plus the green, and then we would take out just the high that was put in for the first 15 minutes, as opposed to the high that was put in for the first 5. Okay, and that's kind of one of the most basic strategies that you can look at on the open. It's really very much predicated on the momentum, the opening momentum, the clearing or opening range, and taking advantage of, in this case, a runaway market. Now, normally I like to see trends that move higher and correct, trends that move higher and correct, right? That's what I like to see. But what if the market just takes off and doesn't even look back? This is a perfect way to trade a momentum sort of runaway market. If it looks like it was shot out of a cannon, there are ways to trade it as long as the market structure is basically showing you that there's a high probability of follow through. And it's basic things like the consistency of a green grab candle and the cross of the 8 exponential moving average through the 21 as represented by the propulsion dots. It's just a cleaner way, I think, of showing that relationship. So when you've got the dots, that's really when you know the market's got its foot on the gas pedal, and you could look for these breaches. So this was how we kicked off the morning, and that's the setup. All right, hope that was helpful. You know, tomorrow you can put it right to work. There are some nuances to this, but you know, as far as the basic setup, you know, what are you looking for? Green grab candles, propulsion dots, and you want to use timing on your side. And you know, one thing we're doing a lot more of in the room is using time and volatility. And if you are a futures trader, this is something that a lot of futures traders don't look at the way we do. You know, what we're doing is looking at historical volatility and historical price movement ranges. And if you're an options trader, you're really going to love this stuff, because what this is taking advantage of 2 elements that options traders are already very familiar with, time horizon and volatility, but we're calculating it in a different way, I think in a better way. And in more videos, I'll show you what we're doing with time and volatility as we can trade futures options. Okay. All right. I'll see you in the next update.